Okay, so we've explained normal balances. Now we're going to use this series of transactions over here to practice making journal entries. There are no dates given, so I'm just going to make up some dates. Let's say we're starting all this out on August 1st. Okay, now read number 1 here. It has Rose Tyler transferred cash from a personal bank account to an account to be used for the business. The amount is $20,000. Okay, so we have to ask, what happened here? The business got what? Cash. Cash is what kind of account? It is an asset. Okay, assets have normal debit balances. So to increase cash, I'm going to have to debit cash. So here's a cash account. I'm skipping the posting reference for now because you don't use that till later. And I give it the $20,000 debit balance. Okay, let me do some formatting on here so it has commas. I really don't want the dollar. Oops, wrong way. There we go. Okay. Now, we need another half of it. Rules of double entry accounting. You have to have at least 2 accounts. You can have more than 2, but at least 2 accounts. So the other one, she got cash. What do we do with it? In order to keep our accounting equation in balance, we have something happened on the asset side. So something has to happen either to balance that out, to balance it out one way or another. We're going to use the capital account. Okay, so we're going to write, let me put a few spaces in here because we indent our credits. Rose Tyler, capital. Okay, capital is being increased. Okay, how do you increase capital? Look, that's the stuff on the right side over here. Capital is increased with a credit, so we can put our $20,000 right there. Okay, and our first entry is done. Let's go with the next entry. Let's see. Let's make up a date again. Let's say this is 8/5. It says we purchased supplies on account. So what happened? The business got supplies. The on account, keep this in mind. On account means you're either dealing with an account payable or an account receivable in some manner. Okay? Since we bought these on account, what it's telling us is that we bought them and we have not yet paid for them. So we owe somebody money. We're going to use an account called accounts payable to handle that. That's going to be our liability account. But let's deal with our supplies. Supplies are an asset. It's a resource that the business has to use. Now, as they're used up, it may become a supplies expense. But right now, it's an asset. Okay? So to increase an asset, what do? We look up here, AED, LRC. Assets have a normal debit balance. To increase this account, I am going to have to debit it. So let's debit our supplies account. Okay? Go ahead and give it the $2,500 debit. Now we've already talked about how did we pay for these, and the answer was we didn't. Okay, we owe somebody money. We're going to use accounts payable. It is a liability. Okay, right here, liabilities have a normal credit balance. We will increase this account by giving it a credit. Okay, so now we have 2 entries done. Next, make this 8/6. Okay, we earned fees and we received cash in the amount of $14,300. Okay, the easy part, what did we get? We got cash. We like cash. Cash is good. Okay, so cash is an asset. Okay, assets have normal balances on the left side or the debit side. So our debit will be cash in the amount of $14,300. Okay, now we ask ourselves, why did we get cash? Because we earned it. Says we earn fees. Now we don't have the whole chart of accounts for this problem sitting in front of us, but the account that we're going to use to show that we earned something, our revenue account, is going to be fees earned. Okay, and we just said it is a revenue account. Revenues have a normal credit balance. Okay, and over here, credit balance. So we give it a credit. And there we go. Notice, so far, the rules of debits and credits. Every transaction has at least 2 accounts. Okay, we got that. And the sum of the debits have to equal the sum of the credits. And these are all exactly the same, so they certainly are equal. Moving on to the 4th one, we paid rent on office. Hold on here. We're going to go on to that one after we pause and make another part because I'm about to run out again on my 5-minute time.